So, since the last time you were on the show, you were the first person mentioned in this big New Yorker profile about Marc Andreessen. Ultimately, Andreessen Horowitz investing the entire round, taking your entire round at an $865 million valuation because they think your promise is so big. What is the promise of Mixpanel?
Yeah, I think the first step for us is our goal is to provide data science to as many industries in the world as possible. So alongside when we raised our round, we also released our pitch deck, and in that pitch deck we articulated the problems that we wanted to solve. And the promise being that we think that there are a number of industries that don't do a good job of quantifying information and being data-driven, so we think we can apply very advanced analytics to product, marketing, sales, and finance within companies.
And one of the main things you track is engagement as opposed to just traffic. You know, there's a lot of talk, I was just speaking with John Callahan about how well many of these private companies are doing. What are you seeing? Are they seeing strong engagement?
Yeah, the funny thing about that is Fitbit's actually a customer of ours. And so Uber's a customer, Spotify's a customer, and those companies, they're tracking exactly how people are using their applications. And what people have found on mobile is that if people are engaging with their applications, they're coming back, they're using it again, that means their application is doing really, really well. So these applications, I mean, you can see Uber's valuation, you can see Fitbit's valuation. They're delivering on the promise that they can get these people to interact with their apps. And so that turns out that measuring engagement is the right metric for those companies.
On that note, I recently spoke with Marc Andreessen about, his views on startups right now, valuations, bubble. Take a listen to what he has to say.
I don't know if we have a headline, but it's be measured, be cautious, be careful, but also invest in growth. And when we have companies that are growing fast, we don't tell them to pull back because the stock market blips. In fact, if anything, we tell them to push forward and go take down the market. And so for the companies that are doing well, I think they're going to do really well.
What is Andreessen telling you inside the boardroom?
Yeah, so, we at Mixpanel, the reason why we raised money, the entire reason was to grow rapidly. And so inside the boardroom, Marc Andreessen's telling us, he's saying, we should lean into whatever might happen in the economy. And it turns out that, even if something does happen in the economy, the money that we were able to raise gives us the leeway to be able to hire some of the most amazing engineers through through any kind of market dip. So what he's telling us to do is he's saying you should use the money that we gave you to rapidly grow and dominate your own market, irrespective of whether the market is doing very well or whether it's doing very poorly.
Now, your customers might be in a precarious position.
Exactly.
So how does that impact how you think about your business plan? Quickly.
Yes. We diversify our business. So we might go after parts of the enterprise. We might go after small companies. But our goal is to be able to own that entire set of segments. And so what we do is we go up market and we diversify.